Well, it is the investment strategy you might not hear directly from your financial advisor. And joining me to talk about it is Austin Root. He is the research director at Stansberry Research, and Austin joins us now.
Thanks for having me.
So, Austin, what do you mean by this contrast that you're drawing between renting stocks and buying them? Talk a little bit more about that.
Yeah, sure. Thanks. So the high level concept, Jessica, is that you take more time when you focus on something you own versus rent. And so the analogy that I've used is thinking about a rental car or a vacation rental. You're putting far less time into figuring out the make and model of that rental car, or exactly how nice the house is put together if you're renting it for a week, versus if you were going to own own that house, you put more time into it, and ultimately I believe you make better decisions as a result of it.
And so how does that translate into stocks? What do you consider renting a stock, and what do you consider buying a stock? Because you are buying all of it, but there are a lot of different ways to go about it.
That's right. So the first piece is, I believe that a common mistake that most investors make is they feel like they can outwork the stock market. They can, if they trade in and out and just do more, just buy and sell more, they'll improve their results. And the reality is that the data doesn't show that. In fact, quite often, Charles Schwab had a stat that the best performing accounts for them were the ones that were doing the least amount of trading. And so with that in mind, we want to find stocks that we can buy and own for the long term. And that is because they're durable franchises, they're growing, and because we believe in the business model and it can endure over a cycle, both through the good and the bad.
So it sounds like time is kind of the key here. You have to have time to pursue this strategy.
Yes, so you have to be informed. The questions you should answer before you start owning stocks and really putting a big portion of your investment dollar in any one stock is, first and foremost, do you know the business model well enough to explain it to a 10-year-old? The second is, are you comfortable putting 20% of your net worth into this stock? Now, I'm not saying you have to put that much in, but if you're willing to put that much in, then it's checking the box that it's a really good investment and not just a rental that could be up and down and you wouldn't want to own it. The third piece is kind of related. Would you be willing to own this stock for at least 10 years? And the point there is this an enduring franchise? Is this something, you're not buying the shopping center shoe store at the last year that people are really going to the malls. You really believe that you're going to own this thing for the long term, and the business model itself is durable. So those are the three key questions to answer, and they do require some time. The second part of this, Jessica, maybe what you're asking is, if you have that amount of time, if you are able to make the right decisions for your investments, then probably the most controversial thing that I've written recently is you should own stocks and not index funds and mutual funds.
Yeah, we often hear the opposite, and maybe it's because a lot of us don't have the time or the aptitude to do all the research you're suggesting we need to do to be the kind of investor that you're talking about. But why is there a push towards all of these funds when we may do better, as you point out, investing in individual stocks that we truly believe in?
Most people don't have time to do good work, and that's what Stansberry Research is all about. We're trying to save you the time by doing the work for you and providing sage investment advice. The other piece of it, though, Jessica, is back until the last couple of years, it was actually quite expensive to be trading and buying and selling stocks. But commissions, when I started my investment career, it was probably $150 to trade per transaction.
Wow, that's steep. Yeah.
Now it's zero. So that friction has gone. So now, if you have time, even if you have a small amount of money, you don't have to worry about that piece of it. And the number one thing that you noted is, actually, if you parse the data, individual stock selection has outperformed mutual funds and ETFs over the long term. And I'm happy to get into why that is, or the data if you want, but you've probably heard the opposite, Jessica, and that is because They're looking at the entire universe of managers, and most of these managers are paying a fee. You're charging you a fee to manage your money, and a lot of them are just investing in the index. So they're kind of closet indexers, we say, where they're not providing you any value. But those ones that do actually invest, those professional investors over time have beat the market, and that's what we strive to do here.
All right. Austin Root there, the director of research. He ought to know at Stansberry Research. Thanks for coming in. Appreciate your time.
Thanks so much.
And if you'd like to catch up with more Stansberry Research content, please check these social media channels and find us. That's all for now. Thanks for watching. I'm Jessica Stone.